Let's bring in our good friend, Sarah Foster, to kick off the show. She is U.S. economy reporter and analyst at Bankrate. Thank you for being here, as always.
Thanks for having me back. Yeah, always great to be here.
We're still right. There seems like there's so much choppiness, so much volatility, so much uncertainty. We're still right about at all-time highs. What are you tracking for price action?
I'm calling it falling up the stairs. It's, choppy. The markets are volatile, but I think for the first time in a long time, what I'm hearing from many economists that I'm talking to is that there's optimism. We run a quarterly survey. 50% of the economists that we polled say that growth could be above trend this year. Only 20% expect it to be below trend. I think there's a lot to be really positive about. The usual suspects: inflation, the labor market slowing. That is maybe kind of an uncertainty here. But when you look at just the resilience of the economy, and I think even when you look at what the Fed is expected to do, they're cutting interest rates towards the end of the year, and that has really kind of been kind of a tailwind for many people.
We're still not expecting a Fed cut January 28th, right?
Patience is really the word here, I think, for the Fed. Last time I looked, which, things change in a hurry, 32%, that's the odds of 2 rate cuts this year. The Fed is likely going to be patient to start the year, and that's just because of the data that we've gotten lately with inflation, with the labor market. Especially with inflation, I'm still seeing some government shutdown-related distortions, some of those service sector costs. Airline prices, they bumped down in November, they ticked back up in December. Apparel prices, they fell in November, they ticked back up again in December. I think the Fed is going to need some time here to kind of piece out a lot of this, the noisiness, and just wait for the fog to clear.
Sarah, what else was in the Bankrate survey that you think is important for people to follow along with?
I think it's important to know, I think that recession odds, those are the lowest in a year that we've seen, 28%.
Wow.
A lot of these economists that we pulled are really pointing to AI spending as driving growth forward. In addition to an easier Fed, mandate, I think we're also kind of looking here at tax refunds being higher, 18% according to some estimates from Wells Fargo. But I'm also focused, on what this means for everyday people. Economists are very optimistic, but people that we survey are very downbeat. The most people since 2018 actually say that they expect that their finances could get worse in the year ahead. And that's, the same story here, the K-shaped economy of so many people in these lower income sectors. They're the ones who are feeling it a lot differently than those upper income folks involved in the stock market.
Yeah, I was about to ask about the K-shaped economy. Some people call it a tree-shaped economy. Pick your kind of shape of choice there. Who is the economy largely helping? What more do we have a sense for consumer confidence and consumer sentiment, which does drive kind of the overall economic positioning for a lot of Americans and how they spend money in the day-to-day economy?
Yeah, we just released a survey at Bankrate that found that about 50% of cardholders are actually carrying debt from month to month. Long-term credit card debt is also on the rise. It's really concentrated among those lower income households, who are still dealing with inflation. We also look at, wages versus inflation. We still see that there's a little bit of a gap here. So their purchasing power, when you look back to the beginning, or at least the beginning of the recovery from the pandemic, it's still in the negatives. So that K-shaped economy is really referring to those lower income households, and then of course kind of looking back forward for what they're expected to do.
Almost out of time. Before I let you go, your sense on big bank earnings, kind of a mixed picture, but we saw a fair bit of profit taking earlier this week here on Wall Street. Net interest income in question. What else have you been following there?
Yeah, very surprising. I'm also looking here this week at jobless claims, talking about the labor market. We were very surprised to see that, at least on that initial claims number, it was the lowest since January 2024. I think when it comes to the labor market, you're also looking here at job growth in 2025. It was about a fraction of what it was in 2024. So when we're talking here too about how downbeat so many households feel, I think when you look at how job growth is really just not really helping very many people find a new position. They're kind of stuck in that low hire, no fire labor market. That's another thing that I think is going to be important to watch.
Sarah Foster, one of our absolute favorite go-to guests here for Taking Stock. She is U.S. economy reporter and an analyst at Bankrate. We always love the survey data in particular. Come back anytime. Great to have you.
Thanks for having me.